أعوذ بالله من الشيطان الرجيم بسم الله الرحمن الرحيم الحمد لله الصلاة والسلام على رسول الله السلام عليكم ورحمة الله وبركاته. Welcome to our third session. We're going to continue chapter 8, which is on audit sampling. And before we go into new concepts, we're going to review what we have learned so far. The first thing that we discussed in this chapter was a representative sample. Now, who can remind us what we mean by a representative sample? Anyone? What do we mean when we say we have a representative sample? Sample that statistically represents the whole group. The proportion of types in sample needs to be similar to that of populations. So good answers. These are both of them are good answers. So we want the distribution in the sample to be the same as the population. So if we have 50% male and 50% female in the population, when we take a sample, the distribution in the sample should also be 50% and 50% or close to 50% and 50%, right? That's a representative sample. Very good. The second thing we discussed was sampling risk. What is sampling risk? What do we mean when we say sampling risk? Anyone? That's the result. That's the result of an error. But sampling risk, right? Sharat says making wrong interpretation. Making wrong interpretation is the result of the non-representative sample. Sampling risk is the risk that your sample is not going to be a representative sample. The risk that your sample has been taken from the population, the sample that you took is not representing the population. So that is sampling risk. The risk that your sample does not represent the population. From that stems two types of errors, type 1 error and type 2 error, right? If your sample is not representative, you could make one of two errors in your conclusion, type 1 and type 2. What is type 1 error? What is type 1 error? Incorrect rejection. Very good. It means that your sample has a non-representative distribution and it shows that there are many errors while the population actually does not have many errors, and you incorrectly reject it. You say that this is not correctly done, this is not true and fair. So that's sampling type 1 error. What is type 2 error? Incorrect acceptance, right? Incorrect acceptance. Now, incorrect acceptance is when you take a sample and in the sample there are fewer errors than the actual population, and you conclude that the population represents, the sample represents the population, therefore there are few errors in the population, but in the actual population there are more errors. In your sample you did not have enough, right? So that is called incorrect acceptance. What is confidence level then? Of course, it is opposite of sampling risk, but the confidence level has its definition. How do we define confidence level? The confidence level is defined as the confidence that we have that the sample is representative. Very good, Sharat. So if I say 95% confident, that means I am 95% sure that my sample is representing the population. What is tolerable error? How did we discuss tolerable error? How did we define tolerable error? What is tolerable error? Tolerable error is the number of mistakes we can accept in the sample, the percentage of errors we can accept in the sample and still say the financial statements are true and fair. That's called the tolerable error, right? That's in the sample. The expected error is the number of mistakes we think the population has, right? So the expected error is our expected number of errors in the population, and this is an estimation, and we are never going to know whether our estimation was accurate or not because we are not going to look at the entire population. The tolerable is applied to the sample. The expected is an estimation of the errors that are in the population. Okay? And the precision is calculated. How? Do you remember? How is the precision calculated? The difference between the tolerable and the expected, right? So precision is tolerable minus expected. Expected is usually, almost all the time, less than the tolerable. Okay? Expected is usually less than the tolerable. So these were the concepts we studied in our last class. If you have any difficulty with any one of them, you can go and watch the video from our last class again. And if you haven't watched it, if you were not in class, you should watch it and try to understand these concepts. And if you still have questions, you can email me or ask me during the next class, inshallah. Now we move on to the next topics. The Sharat has a question. Is expected is greater than tolerable, then the financial statements are qualified? No, it's not that simple. It's even if your tolerable is, if your errors are within the tolerable, there are procedures. So don't jump to that far. We will come slowly, right? Qualified, unqualified is going to come far later. You follow, way down the road. So try to understand, small pieces at a time. You cannot grasp the whole thing. That's why I'm giving you a small piece at a time, and it will build, right? So qualified, unqualified, this is, far greater than just one calculation. All right. Now we have three topics that we're going to discuss. One is when to sample, the second is type of audit sampling, and the third is uh, the different types of audit sampling. That's the second one. The third one is the advantages of statistical sampling. So let's start with the first topic. The audit is made up of many procedures, and in auditing 2, you're going to learn these procedures, the audit procedures. Some of these procedures, when you're performing them, you have to do sampling. You have to take a sample. In other procedures, you don't have to take a sample. You can do all the work because there is not a lot to do. And we're going to try and introduce ourselves to some of these procedures. And again, we're going to learn each one of these procedures in much more detail as we go through our chapters. The first procedure that's listed here is inspection of tangible assets. Inspection of tangible assets, actually physically looking at the condition and the number of tangible assets the business owns. So tangible assets include computers, furniture, vehicles, buildings, inventory items. All of those are tangible assets. And the business has thousands and thousands of tangible assets, thousands of boxes of inventory, maybe hundreds of computers, hundreds of cars, etc. We cannot inspect the quality or the quantity of every single one of them. So we take a sample. We take a sample and we look at and we recount. We look at the quality, and we have to look at the quantity by taking a sample and then make our conclusion based on the sample. And again, exactly what we do, which assets we look at, we will discuss this slowly. But inspection of tangible assets, looking at the actual physical assets, you cannot do all of them, so you have to do sampling. You have to take a sample. If you don't understand any one of these, you can stop me and I will explain to you. The details will come later, right? So we're trying to just get an introduction to these procedures. The second is inspection of records and documents. Inspection of records or documents, when we say that, we mean items such as checks and invoices and sales orders, right? Those things, they are in thousands, and we cannot inspect all of them. So we have to take a sample of those documents, and we have to inspect the sample to come to our conclusion. Okay. The third is reperformance. Reperformance is going through certain procedures that the client has gone through to see whether we have the same conclusion as the client or not. So the client has gone through many procedures to prepare the financial statements, to process the documents, to approve certain documents, and we take a few of those things that the client has already done and we redo them to see, do we come to the same results, do we come to the same conclusions or not. The third one is recalculation. So again, the client has also done many calculations, such as calculating the depreciation, calculating the ending inventory, calculating the cost of goods sold, and there are thousands of those calculations. We cannot recalculate everything, but we take a sample and we re-add and subtract and divide those numbers to see if our end result, the ending number, is equal to what the client has done. what the client has calculated. So we take a sample and we do those. The fifth one is confirmation of balances. Confirmation of balances are usually done with third parties. So let's say the client has 5,000 customers. That your client, the company that you're auditing, has 5,000 customers, and each one of them have an accounts receivable. Well, you cannot call 5,000 customers and check the accounts receivable balance with them. So you can take a sample from that 5,000, and you can call 50, 100 clients, customers of your client, right? Customers of the company that you're auditing, and then you can confirm those balances. And again, this, you need to take a sample here. You cannot do everything. And exactly how the confirmation of balance is done, or how the reperformance is done, or how the inspection of tangible assets are done, all of these details we're going to learn as we go through our chapters, inshallah. So these are the 5 that we generally take samples before we do the work. The next 4, we do not do sampling because the work is not that much, and we can do most of the work, so we don't take sample. The first one is analytical procedure. Analytical procedure is testing the reasonableness of the financial statements. So here you run some ratios like quick ratio and current ratio, things like that. You do some testing of numbers against the industry average, some mathematical calculations from the financial statements, and the financial statements are only a few pages, 10, 15 pages maximum. So you can do these numbers, you can do the analytical procedures on the entire financial statement. You don't need to take a sample. And the details on what is involved in the analytical procedure, exactly what you do, we're going to learn, inshallah. The next is scanning of documents. When we say documents, in this case, we don't mean receipts and invoices and sales orders. We mean the footnotes. We mean the minutes of the meeting. We mean the important documents that are few. And we can read all of them. We can look at all of them. We don't need to take a sample because there are not many, right? There aren't many. The next is inquiry of individuals. When we do our auditing, we go around the company's office and factory and so forth, and we ask the people that are performing different procedures questions about what they do, how they do it, when they do it, why they do and do not do certain things, etc. And these people that we are going to ask are not many, right? There are only a few people that are performing the procedures, and we can go to them and we can ask what they're doing, how they're doing, etc. So the inquiry of individuals do not need to be sampled. We can ask the individuals. Now again, you don't have to ask every single individual performing the same task. So let's say you have 10 clerks working in the accounts payable department, and they are supposed to do the same thing. So your purpose is to learn what they do. You can talk to one of them, right, in that department. You're not going to skip any procedure that they do. You're going to ask everything that they do, right, what they do and so forth. So inquiring of the people in the accounts receivable can be done by talking to one of the clerks, and you want to look at everything that they do. So no need for sampling. The last one is observation of procedures. Again, this is just standing there and looking at what each one of these steps, the people in each one of these steps are doing. So you can stand in the office in each department and see what they do physically when they're doing it. So if they're processing a check, they're processing an invoice, they're processing an order, you can look at, and you don't have to skip any. You can look at all of them. It will not take a long time. And there is no need for sampling in this case. All right. So far, so good. Are you following? Are you with me? Okay, very good. Now we go to our next topic, which is uh, the exceptions. When you have only a few large items, you need to look at all of them. So, for example, let's say you have the client has 5,000 customers, but there are 10 customers that have a balance of more than 50,000 reals, more than 50,000 reals in accounts receivable. Only 10 of them. So this is a large category. You don't need to sample from that category. You need to look at all of them because they're all large. And if there is a mistake in any one of these numbers, the mistake is going to be large. So you want to look at every single one of them. So there are only few large items. You want to look at all of those large items. No need to sample from that category. The next exception is if the calculation is done using a highly automated system. So the system works based on predetermined formulas and predetermined instructions and so forth. You need to see whether the formulas or the instructions are accurate or not. So let's say the system calculates sales tax and the sales tax is 5%. Well, you want to check whether the instruction given to the computer says 5%, if that 5% is accurately entered. If that is the case, then the computer is not going to make mistakes in calculating the sales tax. You can just test a few calculations and you can be uh, comfortable and you can be sure, you can rest assured that the calculation is accurate. All right? Does it make sense? All right. Now we come to our next topic, which is types of audit sampling. The sampling methods could be statistical and non-statistical, and it is applied to three different sampling techniques. So we have attribute sampling, monetary unit sampling, and classical variable sampling. In the attribute sampling, we have statistical and non-statistical method. In monetary unit sampling, we have statistical and non-statistical. In classical variable sampling, we have statistical as well as non-statistical. The attribute sampling we're going to learn in detail in our present chapter, which is chapter 8. The monetary unit sampling and the classical variable sampling, we're going to learn this in detail in chapter 9, but I'm going to give you an introduction to all three of these today, right? I'm going to give you an introduction to all three of these today. In each one of these sampling techniques, we are going to again learn how it's done using the statistical method and how it's done using the non-statistical method. There is some benefit, there are some advantages of using the statistical sampling. The first advantage of using the statistical method is selecting an efficient sample size. When we use the statistical sampling method, the advantage of using a statistical sampling method is you can get an efficient sample that is representative of the population. Now, we are independent external auditors auditing many companies, and our life is busy. If we can get a smaller sample, that is better for us than getting a large sample. So if we can get a smaller representative sample, if we can get a sample of 100 that is representative, that is better than a sample of 300 that is representative. So statistical methods allow us to take an efficient sample, a smaller sample size that is representative. And how is that? We are going to see how the statistical method works. We're going to learn how to do that calculation. But generally, statistical methods generate a more efficient sample size. The second benefit is measuring the sufficiency of evidence, meaning once you have taken the sample and you have done your calculations, if you're doing a statistical sampling, if you're applying a statistical sampling method, you can calculate whether the sample was enough, whether it was sufficient, whether the sample you took was enough to come to your conclusion, or do we need to take more samples, right? Do we need to take more items in our sample? You can calculate that. Again, this is a benefit of using the statistical method compared to the non-statistical method. The third one is quantifying sampling risk. Quantifying sampling risk means when you use statistical sampling methods, you can say the sampling risk is 3%, 5%, 1%, 7%. But when you do the non-statistical sampling method, generally you use terms like high risk, low risk, medium risk, very low risk. You cannot put a number if you're doing a non-statistical sampling method. And again, as you study, you will come to know that statistics is not an exact science, meaning statistics is based on probability. So there is no certainty. There is always the chance, even if it is very small, that what you have done is not accurate. There is a small chance, always a small chance, that your conclusion is inaccurate. So statistics is not a an exact science, and every statistical method has some benefits and every statistical method has some disadvantages. And some people prefer certain statistical methods while they criticize others. So everybody has their own preference for the statistical methods. There is no one correct answer. In each one of the methods you apply, you're going to end up having a small possibility. Even if the possibility is small, you'll have the small possibility that what you are concluding is inaccurate. All right. Any questions so far? I know I have told you a few technical things in this slide. Do you understand? Any questions? Any difficulty in understanding this? So far, so good? Clear? Okay. Now, in the next few minutes, we're going to introduce ourselves to the three different methods: attribute sampling, monetary unit sampling, and classical variable sampling. Attribute sampling, the word attribute means quality. The word attribute means quality or sifa of anything. Attribute sampling is used to estimate the portion of a population that possesses a specific characteristic. So you want to see whether something is present or absent in the population, right? And it's commonly used for testing of controls. And we're going to understand this with an example. Remember, we discussed internal controls in our last class. Internal controls are procedures to ensure how many things? The internal controls are procedures that the company adopts. Procedures that the company adopts to ensure how many things? Do you remember? How many things? Three, right? Three things. What is the first one? Very good. Preparation of true and fair financial statements. So the company wants to prepare true and fair financial statements, so it has some procedures in place, such as hiring qualified accountants, looking at their work, giving them the right tools, giving them the right computer softwares, etc., so that they can prepare the financial statements that are true and fair. Some procedures in place. What is the second one? What is the second reason for having internal controls? Internal controls. It is to ensure effective and efficient operations. So the business wants to have operations that are effective, that are accomplishing the goals that the business wants to accomplish, and it is efficient, meaning it is accomplishing those goals without waste, without employing unnecessary excess resources. What is the third reason? What is the third reason for which? Very good. Compliance with regulations. So the business wants to comply with regulations, right? The laws of the land. So if the business is operating in Qatar, it wants to follow the labor laws, it wants to follow the environmental laws, it wants to follow the customer rights regulations, all of those things the business wants to follow. So it puts some tests, puts some controls in place to ensure that the business is following those regulations. So when we come to do the audit, we test the controls the business has put in place. We test the controls and we see whether the controls are effective or not, whether the controls are good or they are not good. So let's take a look at an example. Let's say the company that we're auditing, the client that we're auditing, has a procedure in place that anytime the company writes a check that is 10,000 riyals or larger, two managers must sign that check. So it requires two signatures, right? It requires two signatures on checks that are 10,000 or larger. Can you think of a reason why they would do that while the checks that are less than 10,000 has only one signature? Why would they require two signatures? What is the purpose? What are they trying to accomplish? Can you think of, can you uh, identify, can you think of why they're doing that? Second goal, ensure effective and no, that's general, but what is the purpose? Right, very good. Now, we want to use the word minimize and not avoid, right? Minimize, minimize fraud, right? Because it is not, it is practically impossible to avoid it. There will be small scale theft and so forth. You cannot catch everything, but you want to minimize, you want to reduce it as much as possible. So they're going after the big numbers, right? So the idea is if two people sign, then at least two people are involved. And when you have more people involved, generally when you have more individuals involved in doing and checking and performing things, the possibility of fraud reduces because it's those people would have to then come together and do the fraud, and it is difficult to do when you have more people. So the company has two signatures that are required. When we come in as an auditor, let's say during the year they had signed 1,000 checks that are 10,000 riyals or larger. So we have a box of checks, that 1,000 checks, and all of them are supposed to have two signatures. We want to test whether they do have two signatures or not. So this is the procedure. Now to do that, we're going to take a sample, and this is called attribute sampling, because we are not calculating any numbers or testing the accuracy of numbers. We are just testing the accuracy of the procedure. So we take a sample, right? So they have 100 checks that we take a sample from 1,000 and we see, go through each one of these 100 checks and see, okay, one signature or two signatures, one or two, and then we separate those checks that do not have two signatures. Let's say we find 3 checks without two signatures. We have 3 checks without 2 signatures. This is called, in auditing terms, deviation, right? Anytime we find a check that does not have 2 signatures, we call it a deviation, right? We call it a deviation. So we have 3 deviations. So far so good. We have 100 checks and 3 checks we found without 2 signatures. We took a sample of 100 from a whole box of 1,000 checks and we found 3 deviations. Are you following? Are you following? Based on those findings, we are going to check how much did we say we can tolerate, how much did we say we can expect, and some other numbers. Based on that, we will calculate whether we conclude the internal control to be effective or not effective, right? Is the internal control procedure being followed or it's not followed? Based on that, based on our calculations, and how do we calculate that, etc. We will come to it in more details, inshallah, in the next few classes, inshallah. But so far you understand the idea of attribute sampling and idea of testing of internal controls. Do you get the idea? It is for a particular quality. So we are testing a particular quality, but to test that quality, we have to do some calculations, right? So we do calculate some numbers, but it is to test a quality of what they have done, right? So the quality here is, the attribute here is the testing of the 2 signatures. We are not saying that this check is for 12,000. Is that number accurate? We are not after that. We are after just the quality of the check, which is 1 signature or 2 signatures, right? Is that clear? Okay. So this is attribute sampling, and the rest of the chapter 8 is on attribute sampling. We are going to elaborate on this starting from Sunday, inshallah. The next few minutes, I'm going to give you a brief introduction on the other 2 sampling methods, monetary unit sampling and classical variable sampling. Monetary unit sampling, the phrase monetary unit means the unit of currency. So we have in Qatar, the monetary unit is, the word unit means 1, right? So the monetary unit is 1 rial. In Qatar, the monetary unit is 1 rial. So 1 means the unit, monetary unit. 100,000 rials is made up of 100,000 1 rial bills. Do you follow? So monetary unit is 1. Monetary unit sampling estimates the dollar amount of a misstatement in a class of transactions or balances. What does that mean? Generally, we are after percentages. So we say the tolerable is 2%, the expected is 3%, etc., etc. So we do the percentage calculations. But in monetary unit, we say that in addition to the percentage, we need to see the actual amount, because 2% of 10,000 is not the same as 2% of 25,000. In other words, let's say we determine that we will tolerate 2%, but once we calculate 2%, we find that 2% is $50,000. So while 2% sounds small, $50,000 does not sound small. $50,000 is a lot. So in monetary unit sampling, in addition to the percentage, we consider the actual amount, consider the actual dollar amount, and we try to determine, are we okay with 50,000? We are okay with 2%, but in this case, that 2% number is too high. Are we willing to accept that kind of error, right? So in monetary unit sampling, this is taken into consideration. Are you following? Exactly how and what we do, we will discuss this in chapter 18, chapter 9, inshallah. You get the idea. Do you understand the idea behind the monetary unit sampling? Yes, no, maybe. Jasmine said he does not understand the monetary unit sampling. We look at the actual dollar amount in excess to the percentage. We determine, let's say, a 2% error, a 2% deviation is fine. But once we calculate the number, we see that 2% is a large number, right? So let's say for one client, we calculate 2% and 2% is $1,000, right? Okay, this is a small amount and a small percentage, no big deal. But for another client, we say 2%, but that 2% of the client's uh, number is $50,000, $60,000. Well, that actual amount of dollar is a large amount. So it's not like ignoring the theft of $1,000. It's $50,000 is missing, $60,000 is missing. So even though it's 2%, but it's a large amount. So we need to take into consideration that amount in addition to the percentage. Does that make sense, Justin? Okay, very good. Now we move on to the last, which is the classical variable sampling. Classical variable sampling is something that you studied in the stat class. Now, I am supposing that all of you have completed the stat class. Anyone here who has not completed the stat class, the business stat? All of you have done. What you have studied there is classical variable sampling, and we're going to use that as well. Now, I understand that you may not remember much from that class, and I'm not going to rely on what you studied there. I'm going to anything that we need to use, I'm going to explain to you to the extent we need to use it. So this is not a stat class. We're only going to learn about that much statistics that we need to do our calculations, right? If a number is provided and we need to use that number, I'm just going to tell you that this number is going to provide it. You need to use this in this particular formula. Now, in this entire course, there are only a few formulas, not many, less than 10 formulas, and you need to understand them and you need to remember them. And we're going to go through one by one. This is just an example. This will come back to you again. This is just an introduction. You can understand what population size is. The confidence coefficient and standard deviation we are going to address in a future class. Tolerable misstatement and estimated misstatement, you already know what those are. We discussed them earlier in this class, and we discussed them in more detail in the previous class. So if you missed any one of the previous classes, I would strongly recommend you go back and you watch those videos. Every session is recorded, and if you watched it, if you were in class, you want to refresh and you want to make things more clear, you can watch those again, right? So with this, I'm going to end here and let you ask me if you have any questions on what we have discussed so far in our course. Any questions, any confusions, anything you need me to repeat? Okay. All right. If there are no questions, I'm going to end here. Inshallah, you all have a very good weekend and review the material that we have studied and be ready for our class, inshallah, on next Sunday. I'll see you on Sunday, inshallah. Assalamu alaikum wa rahmatullahi wa barakatuh.